So this is a video that I did not want to make because the purpose of this channel or the objective of this channel is to educate swing traders and positional traders. This channel is only for traders. This is not for investors because investors are supposed to look at the intrinsic value of a business and then compare it to the current market capitalization of the business. Investors should not be looking at charts. Warren Buffett, for example, is an investor in the stock market. He does not look at charts. Okay. We look at charts. So we are traders. So this channel is for swing and positional traders in the stock market. Okay. However, a lot of people were asking me about my own personal investment philosophy. So this video or this topic is not related to trading, but it gives you a macro view of what is my investment philosophy. Okay. So let us begin. So I'm sharing with you today my investment framework, just like I have the orange trading framework. That's a mental model that I follow for my trading. This is the mental model that I follow for my investing. Okay. And by the way, this is not my investment model. Again, I have a mentor in every aspect of my life. So Kim Kiyosaki is my mentor. I have been following her for maybe a couple of decades. So Robert Kiyosaki and Kim Kiyosaki are my mentors, mainly Kim Kiyosaki because I connect more with her philosophy than Robert Kiyosaki's philosophy. I have studied her in detail. Okay. So this is a strategy that I have learned from her. So let us discuss this. What basically Robert and Kim Kiyosaki, both of them are saying is that basically there are four broad asset classes: paper assets, real estate, commodities, and business. So what I have learned from my mentor is that I must select one out of these four asset classes and build my expertise in that if I want to grow ahead faster in my career, in my financial life. I should select one and go deep in that. I should focus on that only. So, for example, if we look at the life of Warren Buffett, Warren Buffett selected paper assets, right? Paper assets means stocks, bonds, mutual funds, derivatives, even cryptocurrency would be come as paper asset. Anything that is paper, savings certificates, unit linked insurance plans, or anything that is paper, okay, that comes under paper assets. Commodities is hard and soft commodities like precious metals and agricultural commodities. Business is where you have your own enterprise, you own a private business, right? And then real estate. Real estate could be residential, commercial, land, warehouse, whatnot. There are different types of real estate. I am not an expert in real estate. So, what my mentor taught me is that out of these four, just pick one and go deep in that. Okay, so Warren Buffett selected paper assets. Within paper assets, okay, my mentor says within that asset class, pick one asset and go deep in that. Okay, rather than spreading out your energy on in all other areas, go deep in that asset. So number one, select the asset class which connects more with you. Number two, select the asset within the asset class which with which you connect the most. This is called the power of focus. That is what Warren Buffett did. He went into paper assets. Within paper assets, he went into stocks, and from there he expanded. He branched out. Okay, you must notice that Warren Buffett does not invest in commodities like gold and silver. He does not have a business, although he has a business called Berkshire Hathaway. But all of that came from his stock investments, right? Basically, his expertise is valuation. He values companies and buys undervalued companies, thereby creating value, and that value helps him to buy businesses. So Berkshire Hathaway is just a investment vehicle for him. His main expertise comes here. He's a value investor in stocks. Okay. Real estate also, Warren Buffett hasn't been big on real estate. All of the real estate that he owns is through his investee companies or through Berkshire Hathaway. But personally, I don't think he's interested in real estate. So If you see, whatever my mentor taught me, I checked whether successful people are they really following this model. And I found that Warren Buffett, although he doesn't know this model, but he followed this model, right? If you look at the life of Bill Gates and Steve Jobs, okay, they picked this. They started their own enterprise, their own startup, and made it big. They never went into commodities, paper assets. Have you heard of Bill Gates investing in mutual funds? Have you heard of Steve Jobs investing in mutual funds? They never went into commodities or paper assets or real estate. They may have a family office which is investing funds on their behalf, but they are not involved. Okay. Their main thing was business. So they selected business and they went deep into that. Similarly, there are people like, say, Jim Rogers. Jim Rogers wrote a book called Hot Commodities. So he selected commodities as his primary asset class. Within commodities, I'm sure he specializes in some specific commodities in which he went deep and created his wealth. So, if you look at what my mentor has taught me, and if you look at what successful people have done, it all connects. So, I started connecting these dots. So, I decided to adopt this model in my personal life. Now, what my mentor has taught me is number one, you select one asset class out of four. Number two, within that asset class, you select just one asset and you go deep. That is called the power of focus. Now, after learning this from my mentor, I gave this model a thought and I came up with my own investment philosophy, which I want to share with you. So, whatever you hear from now, this is my investment philosophy. I decided that this was many years ago, by the way. I decided that my investment philosophy will be like this. In every asset class, I will select two assets which I understand the most. So, for example, let's say paper assets. In paper assets, I have selected stocks and I have selected fixed deposits because these are the two assets that I understand the most. I don't understand mutual funds, I don't understand derivatives. Mutual funds, I understand. I have created courses, I provide education, but I don't specialize in mutual funds. I specialize in stocks. Okay. This is about focus. This is about specialization. So I decided that I will put my money in stocks and FDs only. I will just ignore all of the other assets just to keep my investing simple. Because if I'm putting my money in too many things, I will have to do a lot of management. So I decided that in my life, I will keep it simple. My money will either go in stocks or it will go in fixed deposits. Now, fixed deposit doesn't mean fixed deposit in bank. It could be a liquid fund or a liquid ETF. That's just another version of a fixed deposit. So basically, FD is a place where I just park my money when there is nothing to buy in the stock market, right? So in paper assets, I have selected two. Okay, similarly, in all other like commodities, I have selected gold and silver. I don't understand agricultural commodities, so I'm not going to go there. In business, I have a training company, which is my education company, a private limited company, which I have 100% ownership. And then OFDL. OFDL means open for discussion and learning. So here nearby my house there is a cafe. I go there very often and I plan to buy 5 to 10% stake in that cafe. So if I approach the owner of that cafe, okay, who is my friend, and if I offer to buy 5 to 10% of his stake in the cafe, that would be an example of a business asset. So that would become a business asset for me in which I own a ownership stake. Okay, that is what I mean by business. It's a local business. It's just 2 to 3 kilometers away from my house. So I understand the area. I have been here 25 years. My family has been here 25 years. So we understand the area. I understand the cafe. I understand the business, how it is working, customers coming and going. I see that every day. So I'm interested in that cafe, right? That would be that would complete my sixth investment. So 1, 2, 3, 4, 5, 6. I have not done it yet. I have not given the offer, but in the future I may. Okay. It's just an example that I'm giving you. Similarly, real estate is open for discussion and learning. I plan to buy one residential and I plan to buy one commercial only for investment purposes. I would plan to give it for rent. So I'm open. If anybody comes to me with a deal, if I understand the deal, I may do it. I may make the investment. Right? It's very simple. But in real estate, currently I don't have any expertise. So I don't want to take risk. As my knowledge, my experience grows inside this business and the real estate space, I will expand there. But personally, I have decided that I will own 8 assets in my life: stocks, FD, gold, silver, a training business, a cafe business, or some other business, one residential, one commercial. That is my investment philosophy. Now, there is something called as diversification. So, if you look at diversification traditionally, diversification is promoted not in the correct way. If you ask a financial advisor what is diversification, that financial advisor may recommend you a mix of large cap, mid cap, small cap, flexi cap, multi asset allocation. He will suggest to you a basket of mutual funds. In my view, that is not true diversification, because when the market goes in a confirmed downtrend, it doesn't matter whether it's large cap, mid cap, small cap, everything is going to come down, right? So, how can that be called as a diversification? On top of that, when you have this mix of mutual funds, okay, you are only focusing on paper assets. What about the remaining 3 assets, right? So, in my view, that large cap, mid cap, small cap theory is not proper diversification. What I have presented to you here, this is proper diversification. Okay. Another input that I added on the model that my mentor taught me is that in every asset class, one of them will be active, one of them will be passive. Now, what do I mean by that? See, FD is a passive investment. I don't have to think. I don't have to manage it actively. Once I put my money in a fixed deposit in a bank, what is there to manage? Okay. But stocks is active. Like I am looking for a confirmed uptrend. I am looking for a base and things like that. So in every asset class, I want one active investment, one passive investment. This is my decision. Okay. So stocks is active, fixed deposit is passive. Active means it's an investment where my time, my money, my ideas, and my energy are invested. That is called active investment. And what I have learned from my mentors is the more actively involved I am, the higher are going to be my returns. So, for example, in mutual funds, if you see, what are you investing in mutual funds? You are investing money. Are you investing your time? No. Are you investing your ideas? No. Are you investing your energy? No. When you are putting money in a mutual fund, you are outsourcing that activity to someone else. So that's a passive investment. When I am making an FD in a bank, that's a passive investment. I'm only investing money. But where I'm investing time, money, ideas, and energy, that is called as an active investment. So my philosophy is in every asset class, I will own one asset. So that's a total of 8 assets. Out of 8, 4 will be active, 4 will be passive. So in paper assets, stocks is active, fixed deposit is passive. In commodities, currently I have kept both as passive because gold and silver are both passive investments. I just have to put my money there. Why should I use my time, money, and energy there? Okay. So currently I have kept both as passive, but in the long run, I might want to club both of these into precious metals category. And the second category would be an ownership in a commodity business. So let's say if I own a wholesale business in which I am wholesaling or I'm wholesaling an agricultural product. Okay. That's a commodity business. Okay. If I own a majority stake in that commodity business where I'm wholesaling an agricultural product, okay, that would be categorized as an active investment in the commodities space. In the long run, I might do that, but currently this is my allocation. Okay. Real estate. If I own one residential and commercial, the reason why I have not currently gone into real estate because I don't understand the space. Okay. My expertise is stocks. Why should I put my money in real estate? Okay. But in the long run, I would like to own uh, a real estate where I have controlling ownership. I can manage the property. And the second one would be like a real estate investment trust, like a real estate mutual fund or something where I own some stake in some real estate deal, but it doesn't give me management control. I am only interested in the cash flow coming out of that real estate. By the way, the goal of this model is to earn cash flow, not capital gains. Okay. With stocks, it is very difficult to earn capital gains, but with others, you can earn cash flow. Gold and silver, of course, commodities, so you can't earn cash flow there. But the overall goal is to focus on cash flow, not capital gains. Okay. So, residential, commercial, I would like to have one active, one passive. In business, remember I said I want 5 to 10% stake in that cafe which I visit almost 3 to 4 times a week. 5 to 10% stake doesn't give me management control, but that's still a stake, right? That's still passive. Training business, which I am education, my YouTube channel and my video course and thing, that's active because my time, my money, my ideas and energy are invested in this business, right? So this is the complete diversification that I have planned for my life in the future. Now, it is possible that I might never ever invest in my life in real estate because if you look at what Warren Buffett has done, he has never invested in gold or silver. He might have before, but he has sold off everything, right? He might have bought companies that are mining gold, but at the end of the day, it is stocks for him. Okay. So in the future, I might own real estate through different vehicles, but I might not even go there. The goal is the more you focus, the more returns you are going to get there. Because one of the most important assets that we have, which is far more important than paper, commodities, business, and real estate, is our own skill. That is why I have written my name in between. Me, myself, my mind is my biggest asset. An asset which is better than paper asset, commodities, business, and real estate. Let me give an example. In 2011, I attended a Dale Carnegie course in Bangalore. It was a 3 day program. It was train the trainer program. I remember paying like 23,000 rupees for that 3 day program back in 2011. So they taught me how to train or how to facilitate a session. They taught me how to teach others. Now, something that I did in 2011, I'm able to apply that today on my YouTube channel. A lot of people have given me positive feedback saying that Rohit, you are a very good trainer, you are a very good teacher. Where is that skill coming from? It came from what I did in 2011 and it is giving me good dividends now. So, what I learned in 2011, I'm earning money based on that today in 2025 and it is exponential return, right? With stocks, you could still end up losing money, but with skill nobody can take away from you, right? The business, it could fail, but skill nobody can take away from you, right? So, far more important than paper assets, commodities, business, and real estate is your own mind. The investment that you do in yourself will give you exponential returns, right? Imagine a a batsman like Sachin Tendulkar, if he sits down and starts thinking about what real estate investment he wants to make, or what commodities he wants to buy, or what mutual funds he wants to buy, imagine if Sachin Tendulkar starts thinking that, okay, it is a waste of his time. The more he focuses on his batting skills, the better it is for him, right? What will he do by looking at a real estate deal or looking at gold and silver commodities and things like that? That is not his expertise. Okay. So focus on what you do best in life and rest everything will fall into place. Just follow this simple model. If you are a data scientist, or if you like artificial intelligence or things like that, if you like to paint, if you like to dance, go deep in that, because the money that will come from that skill, from that contribution that you provide to society, that money will help you buy all of this. You look at Indian cricketers today, they did not focus on real estate. They did not focus on building a business. They did not focus on buying agricultural or precious metal commodities. They did not buy mutual funds. What did they do? They focused on their cricketing skills, their batting skills, their fielding skills, their bowling skills, right? And that one skill helped them acquire all of these asset classes. Almost every cricketer in India owns a startup, that I can tell you, without even looking at their personal financial statements. And not just one startup. One cricketer is owning like 4 or 5 startups. Okay. This model is being followed there. They are focusing more on the center. Okay. They did not branch out even to paper, commodity, business, or real. Everything is coming from the center. Okay. Because they focused on themselves, they invested in themselves. By the way, I have a mentor in each of these areas. So, for example, this model, my mentor is Kim Kiyosaki. Stocks, my mentor is Mark Minervini, William O'Neill, Patrick Walker. Gold and silver, my mentor is Michael Maloney and Jim Rogers. Business training, my mentor is Amy Porterfield from the US. Real estate, I haven't yet found a mentor. But you see what I'm doing? I am not trying to reinvent the wheel. I am just following what my mentors have taught me. And I have checked whatever my mentor is teaching me. I have checked whether this model has worked for in other people's lives, whether it's a cricketer or a celebrity or a Warren Buffett or a Bill Gates. Everybody is following this model. Every successful person is following this model. So why should I not follow this model? Okay. I have made little tweaks in this model. Ideally, I should be going all in stocks. That's the most focused approach. That is what Warren Buffett did. But I'm a conservative person. I would like to own 8 different assets in my life. In my view, that is proper diversification. This gives me uh, the stocks and FDs. This portion gives me returns based on my skill. Gold and silver gives me returns which take care of inflation. Business training and cafe, it gives me returns based on my skill. Real estate, I will see in the future whether I even want to get into that space or not. I will need a mentor there. I have zero understanding of what real estate is all about. Okay. So if we go ahead like few years from now, this is what my overall asset portfolio in my life would look at. I would be an owner of a training company, which I already am. I would be a owner of a cafe. And this is just one. I could be owning 3 to 4 cafes in the future, but that's an asset that I'm interested in. Training company, a cafe, gold, silver, stocks, FD, one residential, one commercial. That's it. It's more than enough. I don't need anything else in life. Okay, this is enough diversification. On top of that, if I continue to invest in myself, if I continue to take courses, if I continue to read books, if I continue to upgrade my knowledge, my skills, imagine what impact it will have on the business that I have created. Right? So, this is my overall investment philosophy. Remember, this is investments. This has got nothing to do with trading. Okay. This is my investment philosophy, which I wanted to discuss with you. I hope this helps you. Remember, diversification doesn't mean large cap, mid cap, small cap. Okay. Diversification doesn't mean equity versus debt and 60% equity, 40% debt, or 60% debt. And that is not diversification. This is real diversification where you own online business, you own an offline business, you own uh, uh, real estate, you own some commodities, you own some paper assets. That's called complete diversification. You notice that the market in India has been falling since how many, 2, 3 months now? But every day when I go to this cafe, the business is improving. Okay, people keep coming and going. The cafe business is not in a recession. The market seems like it is going into a bear market phase, but you sit in a cafe in India, it's a happening place, right? So the business of a cafe is not correlated with the stock market, and I see that with my eyes every day. Okay, thank you so much.